Hi everyone and welcome back to your QuickBook tutorials. Since that we are almost done, we have almost completed the recording of the Subway fast food restaurant. In this particular video, I would like to discuss the general in QuickBook, memorize transaction, sales tax, and memorize report. These four things I would like to touch in brief and kindly pay attention. uh, I'm going to open the QuickBook, which is already open, and first of all we would like to go to the uh, general. Look at this: accountant, make general entry. This general open, the adjustment are done here. For example, we record the vendor's bill and the vendor section. We record the sale invoice and the sales invoice section. We make the vendor payment from the vendor payment section, and we receive the money from the customer section to go to customer and then to go to receive money. Such transaction which is not possible and for which is not given a straightforward voucher by QuickBook in ready-made, we record such transaction by the help of this general. For example, when we deposit cash on hand into bank, we then first debit the bank account and we created the cash account, cash on hand account. Let's see, this 10,000 rupees gone into bank from cash on hand. We record it like this, and then we press save and close button. So this is the one way of to record your general. And the same way we can do any adjustment to these chart of accounts with the help of this general, and we call it adjustment also. Is this box is marked as adjusting entry. So if the transaction is in adjusting entry, then we mark this box. If it is not an adjusting entry, it is a common transaction which is really happened, then we do not mark this box. So in later when we see the reports, the adjustments and the non-adjustment, this box selection is separated, the adjustment and non-adjustment general entries. So this was our general entry. So let me I show you how I use the general entry, and is to record our cost. Let's go to the income statement. Here is the income statement. This is the cost section, and this is the cost recorded. Look at this. This is the cost of goods debit bread, cost of goods debit Pepsi, which we have made in one of our Excel sheet. If we go to that Excel sheet, we can find out that from where is this coming to us, this data of general transaction. For example, look at this recent report, and there must be a cost of goods sheet. Look at this. This is the cost which we record, and by the help of the general entry to our QuickBook, and the cost is gone to the debit side. And the stocks in the chart of account, we have opened all these heads as a stock, so we created the stock and we debit the cost of goods. So this way we have recorded this general entry, and this is, look at this, for the month of March 2019, and the cost is 718425, and we can see that the stock is reduced by 718425. Since that we have managed our stock in the cash, in the amount, we did not manage our stock in the number of units. So this is the cost, manual cost entered to the company. Though there is system in QuickBook in which if we maintain our inventory, then QuickBook automatically can book the cost, and it's automatically coming to the P&L, profit and loss account. So this was the main usage of the journal entry. The same way, if we go to a chart of account and we go to the bank account and run a quick report for the month of March, I'm selecting month of March because in this particular tutorial we are analyzing the data for the month of March 2019. This is the bank. We go to open the debits, select this DE debit and CR for credit. Select this, click OK. This will come to you. This will bring you to this data. So there are some particular charges, for example, which is come to this balance sheet with the help of which comes to this bank statement with the help of the journal entry. Look at this. Bank statement are booked. We have also booked the bank charges in the vendor section. We booked the liability of the bank charges and then we paid it. This is because a facility is given to the operator, because the journal section is locked by the administrator and we do not make most of the time journal entries, and so this way we have completed the bank reconciliation. This is the bank balance on the 1st March, sorry, on 31 March 2019. So I hope you guys understand the purpose of journal in QuickBook. Same way we can pay our sales tax. We go to vendors, we go to sales tax, we go to manage sales tax, and the manage sales tax, you can see the sales tax. If you click this sales tax preferences, it take you to the preferences section. From here you book, from here you do the necessary settings. Your most common sales tax item, this is the most common. So the most common when it is selected in the preferences, so then when we are selecting a customer and when we make an invoice, this is by default coming. Taxable item code is tax, non-taxable item code, this is none. Identify taxable amounts to for taxable when printing. So these are the preferences section, we'll discuss them later. So in the manage sales tax liability, run the following reports to help fill out your state sales tax form. Since that we have already discussed and I have mentioned that QuickBook manage sales tax by default in the Europe, in Canada, and in the countries where there is a facility given. So when in the initial stage when we make a company and when we select our state, QuickBook automatically obtain the necessary data and the necessary sales tax rates, which is then automatically managed. And in our this company, we have managed the sales tax manual, so we did not taken any automatically sales tax taken sales tax setting. Sales tax revenue summary. Look at this. If you click all, this is the total. You double click it, these are the sales tax revenue section. Sales tax payable in fact, which is coming from customers, and view sales tax item, open sales tax code list, adjust sales tax due. Now when we make sales tax, we get two kind of sales tax data. Number one, the sales tax which we receive from customer, and that sales taxes are liability. And when our vendor collect a sales tax from us, we call that an input sales tax, because a vendor which which we have taken sales tax from us when we buy supplies, that sales tax then we claim is an input of sales tax which reduce our liability. So one is output sales tax, which is apply and generating by these sales invoices, and the other is input sales tax, which we collect from our vendors invoices, which the vendors collected from us. So the vendor which we have collect the vendor which they collect sales tax from us, they pay to the related authority, and we claim it because the government allowed it, that a middle person sales tax claiming is allowed. So look at this, adjust sales tax due. You give the date on which date you are doing this adjustment. Entry number is automatic. Sales tax vendor or sales tax vendor is this in renew board, and adjustment account, which account will be adjusted. Look at this, this sales tax payable account will be adjusted. Sorry, we do not select the sales tax account, we select the sales tax input adjustment account. For example, we can click here, go to the bottom of the chart of account. I have made here a sales tax input account, forgetting the name of that account, so I cannot press the initial characters. Look at this, sales tax input adjustment. This is the account that we select. The input will go to this account. Now what is, for example, the amount? Let's see, 5,000 amount, sales tax adjustment. Here look, pay attention to this, increase sales tax by this amount or reduce sales tax by this amount. So we most of the time reduce the sales tax because we are claiming the inputs. We select this and then we click OK. This way we claim our sales tax input. So if we go to our income statement and see it again, we'll find out that we have claimed in the month of March, the input sales tax amount is, look at this, 31,000 rupees. This 31,000 rupees is in fact increasing profit. This is because the net ordinary income, net ordinary loss from the business was 59,140, and this 31,000 is added, and then this 2,000 were less. So the difference of this 31,000 and 2,000 is 29,000, and then 59,000 was original loss, but 29,000 was made in the input of sales tax. So the real loss is this 29,540. If we subtract from 59,000 the 29,000, we'll find this amount 29,540 is loss. So this is how we adjust the sales tax. Now how to make the payment of sales tax? It is a straightforward way. Pay sales tax, you go to sales tax, pay from account, which bank account you want to use for sales tax payment. Sales tax payment here, for example, we are going to use this Mizan Bank. Check date, which day check you are giving. For example, you are giving a check of today, 21 May, and show sales tax due through. You can then select for which month you are going to pay this sales tax. For example, you are going to pay this sales tax for the month of March. So this payment will go in this date for the payment of this month. starting check number, you can write here your customized check number, or you can select this to be printed. Then this will be ignored, and QuickBook will generate its automatic invoice number from inside. And this is the way when we write the amount here. For example, we pay sales tax of 150,000. It will be then it will reduce the liability of sales tax. I'm not going to record this, and I'm going to click cancel, but this is the way of paying a sales tax. Now, after this, when we have observed the recording of journal entry, we have also observed the claiming of input of sales tax. We have also paid attention to the sales tax payment. One thing is a memorized report. You open any report like this. For example, you are going to run a report of profit and loss in detail. You run this. This is your report, and then you go to memorize, and then you give a name to this report, a particular name to this report, and then you select here save in memorize report group. For example, I want to say this the report detail 2, save it to accountant, share the report template with others. If you would like, you select this. When QuickBook is online, then you can the other user can also then access this reports, because this reports added to the report center. Look at this. We have a banking section, we have a company section, we have a customer section, employee section, my reports, and vendors. I prefer it to add it to the accountant, and I will click OK. So this report is selected, and it is memorized, and it is going to the accountant. Here you can see it, profit and loss detail 2. When we close this report, so we can open again this report from this accountant and detail 2. We run it, we come to our report. So after closing this report, which we have opened, we have not customized it very much, but we have memorized it to our accounting reports, which is available for further customization. And then you again press the memorize button. For example, if you click it again, memorize, the report you are memorizing is a memorized report. Would you like to replace the original? So you will simply press the replace, or you need another, you will click new, and one new report and one new name will be saved. Now the next item which I would like to show you is the memorized transaction. We go to the list, we here see the list of memorized transaction. From here, new group, customize columns, and this is this section of memorized transaction. For example, we are going to make one invoice. Fast report. $50,000. We made this invoice, and then we click this memorize button. Click, and it's you are going to memorize this. You say yes, give the name, add to my report list, add to my reminder list, do not remind me, automate transaction entry. So you can also automate the such entries, like when you select this, you will then number of remaining, delay and advance entry, For example, you want to record this transaction, um, of 50,000 for 10 time. You will write this 10, and here is the delay in advance. You want selected every 2 days after. So when you click on OK, every second day you will find out this such invoice is recording. You are starting it from 21 May 2019. But I don't want to do this. I want this to add to my reminder list, and I want to press OK. Our transaction is memorized. Now when we go to our report, you can see that our transaction is here. Your invoice is here. You want to change some figure, you want to change date, you want to change this invoice number, it is already given to you. The other shortcut way is to record your invoice to reduce the selection of fields. I'm going to close it. I don't want to record this. I'm going to open one invoice like this. We go to create invoice. Go back one invoice. Here is an invoice. For example, I want this invoice, the copy of this invoice. I will create a copy. A duplicate invoice has been created. Make any change you need and save the invoice. If you want to duplicate the invoice registering regularly, you may want to use memorize transaction listed. So shortcut you can have here. The invoice now we can change, and after the change it will be saved as a new invoice. The shortcut for this is also given in the memorize transaction. When you open the list of a memorized transaction, it every time open with you as a copy of invoice. Every time you open this, you change it, it save it as a new invoice. So these were the some important things which I would like to discuss with you, and I would like to let you know about these helpful feature of QuickBook. I hope you guys understand this. Now when you record your data, you will find out it easy. So thank you guys. Thank you for watching. Thank you for being with me. Uh, See you in my next video. Take care. Bye bye.